time we answer a question on your stock in a little segment we like to call Your Stock, Our Take. Buy, sell, or hold.
Yeah. So let's get to a company that we have. Brett, you've got this one. A company we've talked about. I think Brennan reviewed them twice. Yep. Maybe he'll have some comments if he can remember at least that he did them. It's PowerBand Solutions, Inc. We'll let you take that one, Brett, then we'll comment after.
All right. PowerBand Solutions Inc., symbol PBX on the TSX Venture, is a technology provider that is developing solutions for automotive and other industries that drive efficiency and transparency in the marketplace. Its driver solution is a multi-dimensional marketplace platform which provides consumers and dealers with streamlined buying and selling solutions. The stock has had an extremely poor performance over the past year, trading for up to $1, now to the 10-cent range. The collapse can be attributed to a few factors. The first factor is just a massive dilution of its shares. The company had an outstanding of 137 million shares at the end of 2020, and by the end of 2021, so last year, it had a whopping 198 million shares, a 44% increase. But that's not the end of it. This year hasn't even come to an end, and it now has 297 million shares outstanding. That's a 50% increase in 11 months. That's just huge. The share dilution alone, even if nothing else changes in the company, creates massive downward pressure on the stock. But there's a lot more to this story. The need for cash has been what drives the dilution and why they've been issuing so many shares. Over the first half of 2022, the company has used $5.2 million just for its operating activities. Operating activities are just generally what the company needs to do to keep the current operations running at those levels. And it will include some other stuff, but that's the general idea of it. During the same period, the company has issued $18 million in shares, leading to the final cash balance of $18 million. But since the quarter years ended, they've issued even more shares, which has raised $5.2 million. So you'll see their current cash balance, which they do report in a few days, will be somewhere between that 18 million and 23 million, depending on exactly how much they've spent in the last quarter. Being cash negative isn't that exactly uncommon for these young companies that they're trying to build some technology platform. It's pretty common. But on the other hand, you would expect them to have high revenue growth, which isn't the case for PowerBand. They were growing up until Q3 last year, but over the past few quarters, revenue has just collapsed to a fraction of what it was. At the end of Q3 2021, it had $9.2 million in revenue, and for the last quarter, Q2 2022, only $4.1 million, which is under half of what it was. A significant reason why is there's just been overall shrinkage in the market. The used vehicle market has fallen by roughly 16% in sales over the past year in the US. Before this dramatic fall in sales, the entire market was seeing high demand, extremely high demand. If you're trying to buy a vehicle during the last year and a half of COVID, before this period, you were paying a massive, massive premium even for used vehicles like this. But now that's really come off. You're seeing still heightened demand and a bit tighter supply, but not anything near what we were seeing in the 2020, 2021 period. So it's just not a weak market, but it's not exactly a strong market like you were seeing before. There is some hope to the company. I don't know if Brennan's ever seen this poster. He's probably not aware of the entire Star Wars series. No. He doesn't ever watch any movies, but there is some hope for the company. They did elect a new board in May of this year, and they've started to change some fundamental drivers in the company. They've suspended their driver's lane segment, and they're only supporting the maintaining the driver's exchange segment to focus all its capital on driver's financial, which is their leasing and financing segment. The new management believes the driver's financial segment has the highest near and medium term return. So that is good because they're actually trying to drive some sort of profitability. So with this company, that's what you need to look for going forward. You need to watch the cash flows and if they're becoming even profitable. Because if they can't do either of those, you might as well be running away at this point. There is no point in staying in this company if they do not become near profitable and they keep having these negative cash flows. So I'm not waiting for this to become profitable. I wouldn't honestly expect it to be, because they have about a 2-year cash run rate at their current cash flow rate. But it's not going to happen most likely. If it does, I would happily be wrong and people can make some money. But it's very, very risky in their current form. So I'm staying away, and that's our take.
Yeah, I'm predicting that Brett gets blasted.
Oh, most likely.
For this. Yeah, because I notice it's always the worst companies that people get the most sensitive about when we say that we don't like them. Wouldn't you agree, Brennan?
Oh, yeah. Yeah.
Brennan's taken the most flack, right?
Yep.
I remember Ryan and I talked about this. It was a marijuana company that bought some ghost town in the US. This was like 5 years ago on our podcast. This was before it went to YouTube. And the thing was trading at a fraction of a cent. All it had ever done was destroy capital. We said we didn't like it, and it just, it was. I mean, for our videos, it went viral, or for our podcast, it went viral. People were angry, to say the least. So I'm going to say that it's probably a good indicator if you get a lot of flack for saying you don't like a company, that just supports your original conclusion.
Yeah, for sure.
I mean, liking the company.
PowerBand, like when we originally talked about it, I think it was reporting gross revenues, right, Brennan?
Correct.
And
yeah,
like,
so they were reporting, or go on.
Yeah, they're reporting gross revenues, which we thought was, it's not a good metric to use, because the lay investor thinks you're talking about actual revenues, right? And they were taking a small percentage. But I mean, I think the key point that Brett had here on the company essentially was, there's not a ton of revenue growth in the last quarter at all. If it had tons of revenue growth and was, raising money because it was putting all its money and investing in this platform, that, maybe you could say it has some speculative value. The fact that revenues declined in the last quarter, and
it's in the last 3 actually.
Yeah.
Yes.
Yeah. And you see that it's significant over time, and you see the company, continuing to lose money, continuing to have to raise the share count. They've screwed up the balance sheet of this, not necessarily the balance sheet, the share structure of the business at this point. There is going to have to be a rollback at some point. You would think, the way it's looking right now, and the share offerings are dilutive. I just, for us, these are the type of stories that this was heavily promoted. And we said, in the 60 plus range, that they were banking, or they were talking about gross revenues. Don't get fooled into thinking those are the actual revenues of the business. Now they've had revenue growth, but again, now that's stopped. And, that could have been a bit of a COVID boost in that time, really, a bit of period when that industry was doing well. Anyways, Brennan, did you have anything else?
Yeah, I was just going to say, when I covered the stock, it was trading at about 40 times price to sales. And yeah, that was the biggest red flag, like Ryan was saying, is the company was talking, they made a press release and they were talking about gross sales year to date of 26.3 million.
And they had to clarify it, right?
Yeah, they had to, literally management had to come out and clarify. They were like, no, okay, we actually only did, 2.1 million in trailing revenue. This gross sales is just the gross amount of vehicle sales. We're only taking a little piece of this. So, I can understand that maybe that is a key performance indicator, but I don't think that you need to be explaining that to the market, in my opinion, or, highlighting gross sales, in my opinion.
The fact that they had to explain it means it was misunderstood.
Exactly.
Right? That's
exactly.
The thing, so.
That's not a good thing for management. Anyways, That's all I had to say.
Yeah. And they just keep losing money too. I mean, we need to see at some point cash flow, and now revenues have declined. And, for us, it doesn't meet our initial criteria.